Hello everyone, I am Sidhant. This is chapter 3 question and answer session. Here in this, before starting, I would like to quote one quotation that success comes from experiences and experiences come from bad experiences. So keep experiences the thing. You will surely get some lessons out of it. So the first question, RBI can issue direction under which section? It's section 21. These all questions are very important as far as the examination is concerned, and these questions are asked in the previous year. You can say that these are the previous year questions which is collected from so many of sources. The first question, the second question, the section 36 of the Banking Regulation Act relates to, it's a advice, caution and prohibition given by the Reserve Bank of India. If RBI can give advice, a caution or prohibition, he can do so by utilizing the power under section 36 of Banking Regulation Act. Section 45ZA relates to what? It's a nomination in the deposit account. Whatever the account that is being opened as a saving bank account, the nomination or fixed deposit or recurring deposit, the nomination criteria is available. The people can choose the nomination, and this is mentioned in section 45ZA. And what about JAIIB? The JAIIB relates to the nomination in the safe custody. It's the safe custody. I would like to elaborate what is safe custody. Bank, apart from the money taking or the money deposit, the bankers also do the business of some important or costly goods, and that's the relation between the banker and the bank and the depositor of that goods are the bailer and the bailee. So under 45ZC, the nominations is available also in the safe custody. The safe custody is also includes the locker facility of the bank. Again section 20 is important. It relates to the amount or the advances or the loans cannot be given on the security of their own shares. For example, if some company wants to pledge their shares and take the loan from the bank, this is not allowed under section 20 of Banking Regulation Act. Again, to write off the loans to their directors, the prior approval of the Reserve Bank of India under section 20A is required. Write off, you must have known that what is write off. The pardoning of the loans amount is called the write off. So write off to their directors cannot be directly given until and unless RBI gives his assent for the same. Again, the next question, the condition of exemption of Reserve Bank of Reserve Fund. You know that what is reserve fund? Reserve fund are nothing, as I already mentioned in the previous lectures, but here I would like to say again, reserve fund are the funds which are taken by the Reserve Bank of India for the public. If something bad happened to the bank, these reserves are kept to pay off the depositors which deposits in that bank. So there are exemptions. The exemptions could only be given if there is enough paid up capital and other reserves associated with that bank or the Reserve Bank of India, and that the reserve amount or the paid up capital is not less than the paid up capital amount. The reserve fund and the share premium balance is not less than the paid up capital. Here 2 to 3 terms are new to you, like the share premium balance. It is nothing but if some shares are issued and if some extra amount comes to the coffer, then this is the share premium balance. And reserve funds are those funds, let's say if share are issued previous year and in this year some the company is in profit, so it has some reserves, that reserves relates to it. The question 7, the non-scheduled banks cash reserve. As we know that there are two types of banks are in India. One is scheduled and another is non-scheduled. The basic difference between the scheduled and non-scheduled is that the schedule 2 of the Reserve Bank of India, there is a mention about the scheduled bank, or in other words, these banks are backed by the Reserve Bank of India, or as they have to follow some norms or rules and regulations given by the Reserve Bank of India. But the non-scheduled banks are not mentioned in the Schedule 2 of the Reserve Bank of India. But in some of the conditions, some of the things, the RBI do regulate these banks, and under section 18 the reserves criteria is also applied to the non-scheduled bank, and they have to keep this 3% of net demand and time liabilities with them. And this amount, these reserves are not taken by the Reserve Bank of India as they keep in the case of the scheduled bank, but this amount is have to keep with that bank only. The next question, what is the current CRR and SLR? As we know that the CRR is mentioned in the section 42 and SLR is mentioned in the section 24. This is very important, the sections of the CRR and SLR. Next question is maximum and minimum of the cash reserves. CRR, these cash reserves are nothing but a CRR, the cash reserves ratio. So what is the maximum and the minimum cash reserves ratio prescribed by the Reserve Bank of India? It's all depends on the Reserve Bank of India to decide. He can keep also 100% or 0%. It's up to the Reserve Bank of India. In the demonetization time, the CRR went up to 100% also. Now the next question is net demand and time liabilities. What is net demand and time liabilities? What are its factors? You should write this. I am saying right now, the net demand and time liabilities is equal to the demand liabilities plus time liabilities plus other demand time liabilities minus the deposits with the other banks. Here the net means that something subtracted from something. So the three positive terms are demand liabilities, time liabilities plus other demand time liabilities, and in a negative subtracting the deposits with other banks are the formula of the NDTL. And you must have known that what demand liabilities consist of, what time liabilities consist of. Demand liabilities, the saving bank account. The time liabilities, the FD, RD you have. The other demand time liabilities, it includes the unpaid dividend, interest accrued on the deposits, or the bill payable, that is the amount of money that is given to the other as a bill is bills payable, and minus deposit with the other banks. The deposits with the other banks are nothing but the amount is kept in other banks as a saving or something else as required, as desired. So the question 11, maximum shares voting rights in a banking company is 5%. Any banking companies, the maximum amount of shares or the voting rights is taken by any individual is maximum 5%. If someone requires more, then they have to take the permission of the Reserve Bank of India. You must have known that what is shares and what is voting rights. The shares are the smallest unit of the ownership of a particular company, and voting rights are synchronized with the shares. The amount of shares you have, the amount of voting rights you have. It's voting rights. Why voting rights are given? Voting rights are given to determine the policy of the particular company or take important decisions in the particular company. Again, the next question is related to the CRR, cash reserves ratio return. As we have already discussed in the lectures as well, but here it's very important, so I'm discussing again, that is each alternate Friday. in CRR return they have to give the details of each alternate Friday. They have to file a return in each alternate Friday of all the things previously of that particular Friday, and within 7 days to which it relates. For example, if one is a Friday, then on 15 they have to file the return of CRR from 1 to 15, and till 22 they have to send this report to the Reserve Bank of India as a return. And there are also some exemptions for the outside or remote banks, that they can file monthly after the permission given by the Reserve Bank of India, and within 20 days they have to file the return. And there are some questions like, if holidays is there on the Friday where you have to submit the return, then it will be in the preceding working day. This is also important. And there also next questions is regarding the penalty. If for one day they are unable to pay, then 3% it is the amount is 3%. If they are unable to comply with the CRR, or in other words they don't have the money to pay as a CRR amount to the Reserve Bank of India, then the fine is 3% the first day, and if it continues then 5% from the second day onwards. And the RBI sees it till 2 fortnight. They can put a fine of 5% to the particular bank, but after that they started fine to the directors, managers, secretary can be fined if RBI desires. Next question, the amount of penalty paid within 40 days. If some penalty is charged against some bank, then they have to pay this amount within 14 days. The next question is approved securities means. What is approved securities according to the definition of the Reserve Bank of India or the Companies Act? The securities in which a trustee may invest money as per section 22 of the Indian Trust Act. You don't need to get into it. You just have to remember that according to the section 20 of the Indian Trust Act, the approved securities are required. So question 16, SLR return. They have to file SLR return monthly basis within 20 days, and CRR I already have discussed. CRR, the second alternate for Friday, they have to file the return. SLR maintained on which basis? As CRR is maintained, I left this in the CRR part. CRR is maintained on the daily basis, but the SLR is maintained on closing of each business day. These are very important. These are very small things, but very important as far as the examination is concerned. The asset requirement. The asset requirement is mentioned in under section 25 of the Banking Regulation Act, and 75%. What is the asset requirement that they have to maintain of all the net demand and time liabilities they have to maintain a 75% quarterly. In any quarter, whatever the amount NDTL, they have to maintain 75% in the form of asset. It doesn't matter, the asset can be a SLR asset, or given in the loans or the advances, that asset, or spent in some securities, that asset. And if there is a holiday, if there is some holiday, then the preceding day they have to file the return in case of the asset requirement. That is the payment of the penalty under section 24 of the Banking Regulation Act are enforceable in the civil court. If someone avoids the penalty, and then what RBI will do? RBI can claim it or enforce it in one of the civil court of India to get the payment of penalty from that particular bank. Thank you. That's it.